Could we be entering a time in which helicopter money becomes normal? You came here for the truth, so let me unveil that for you. Today, we are going to look at what is happening specifically as it relates to rising prices. That's the first thing we need to discuss because this affects everybody. It's not just what's going on with asset prices as you see them, the stock market, the bonds, gold and silver, looking at real estate and so on. No. There's so much more to that. So that's the first topic. And the second thing I want to look at is China slowing down. This is a major signal you should be paying attention to because usually they lead the charge in terms of economic activity. And number three, we need to talk about stocks. That's pretty obvious. This is going to be a big one. Let's go. Take a look at this article here. U.S. consumer short-term inflation outlook jumps according to the New York Fed. I can give you it on the chart. It is astronomical, to say the least, and you can see the direction in which this is heading. Now, you might say to yourself, well, 4.8%, that's not really a big deal. But if you take it a step further and actually don't just read the headlines, don't just read the data points, go in a step further. This comes directly from the New York Fed's website. And you can see the 1 year ahead commodity price change expectations. It breaks it down. Gas, food, medical care, college education, rent, and gold. And if you look at this, for a lot of people, what has become their biggest expense, medical care, the expectation here is 9.4% year over year. That will break a lot of people because they're already at the maximum. A lot of people who are on fixed incomes today, they see a 9.4% increase in their medical care, they're in big trouble. If you personally are dealing with that right now, where the bills are getting too high, let me know in the comment section below. Let me know what you've experienced. It's important that we share this information. Don't hold back. We need to talk about it. Put it in the comments below, okay? Gas, 9.2%. You look at what's going on with oil prices today. It's at $70 a barrel at some point. I have it right here on this screen, $74 a barrel. And then you're looking at of course, the cost of your gasoline, okay? Rent, same thing, 9.7. These are prices people simply cannot pay. And guess what? I got some bad news for some people, coffee drinkers out there. Coffee prices soar after bad harvests and the insatiable demand. How many people are consuming coffee today? And they have seen slowly over time that price rising, but now it's happening quicker than it had been previously. We haven't seen this kind of rise in many, many years. This is just showing you the difference between the Arabica and the Robusta. Robusta, usually you get a good blend in there, but the Robusta gives a better crema, but we won't talk about that. This is not coffee science with the GPS man, okay? Look at the price of coffee specifically. As you can see, Arabica in this particular case here, this comes from Trading Economics. You can find anything on this website, and it just shows you this acceleration. So I could pull this back over a year. I could pull it back over 5 years. So we haven't been at this height since back in, let me pull this up, 2017 timeframe. Okay, you can go back a little further, 10 years, and you could see that we're down from where we were. But what happens? This is my point. This is my point. Even let's take it lumber. I'll show you that before we get into this. Lumber wipes out its 2021 gain with demand ebbing after record boom. So you had the price going up to $1,700 approximately, and then it came down significantly. I don't think I have that here on the chart, but what I'm looking at is the price accelerating to a point, and then it comes down, okay? The futures markets. Look, commodities send loonies soaring, creating a quandary for Canada. Past booms for raw materials aided some regions and hurt some others. Bank of Canada said its policies aim for a shared recovery. They were printing, I believe it's $4 billion per week. Thinking to bring it down to $3 billion. We'll see what happens. They're starting a very slow taper, and they've been doing this for a little while. But understand the dependence on resources for a country like Canada, Australia, same situation, right? Okay, keep that in mind. I'm not done my point yet. Inflation being here to stay has PPG preparing for price hikes, for more price hikes, I should say. This is a paint and coatings giant, and they're considering their third round of increases. CEO says remote work means inflation won't be transitory. That's their claim. Okay, let me just make this point here really quickly. What we're obviously studying now is the need to be out with a third set of price increases. Inflation is across the board. It's obvious. Customers don't have a lot of good ways to counter the argument that we need to have price relief. That means we need to be taken care of in this case here. More money, more money. I'm not seeing this as transitory. This work from home phenomenon is going to lead to additional wage inflation. I don't know about that, because people are going to have the opportunities to figure out where they want to work. It's interesting, but that also means, as they talk briefly about in the next paragraph, is that people are permanently working from home. Some jobs, that's the case, but others are going to be going 2 days a week, 3 days a week, and so on. So you still have to be reasonably close to your place of work. Okay, all of that to say this. If you see the raw materials pricing and those go up, like lumber, they skyrocket. Or in this case, you're seeing a few of them. Lumber at $685 right now. Remember, I said it was at $1,700 not that long ago. Okay? You look at iron ore and steel and coal and wheat and everything else. Each of them has their own set of supply and demand factors. And then, of course, there's speculation behind that and so on. I get it. But when the price goes up in terms of the raw materials and the price that you pay at the store, you're talking about lumber, but ultimately what you pay at the store is going to be different. Is it, treated lumber? Is it a door that you're buying? Is it furniture? Okay, eventually it gets processed into something that you need. And of course, the prices that you pay on that, there's always going to be a lag in between the time, with the futures, and then by the time it actually gets into your hands as a product. There's always a lag. But they'll never come back down, or at least it takes a heck of a long time. Look at gasoline, perfect example, where it just does not come back down to earth. And why? You tell me. You tell me. But the consumer will always pay more. Let me repeat myself. The consumer will always pay more. You are going to pay more. Corporate profits, they're not going to take a hit. Those speculating on all of this, those who are in early, particularly the big corporations, they're not going to take a hit. If you try to get in the trend, like many people did with lumber at the very end, you got squashed. It's always the case. The big guy always gets the win, and you got to take the L. Number one, when you have the inflation as in price inflation of the raw materials, companies will increase their prices. It is an absolute fact. This has been happening many, many times throughout this period, and these companies have been public about what they've done. Number two, consumers, they've got to pay more for something. That means they've got less money to spend elsewhere. The vast majority of consumers are really bumping way up to the top in what they can afford. So unless they want to take on more debt, they are going to only have a limited amount that they can spend. Number three, a slowing economy will have to be offset with helicopter money. That helicopter money will rain from the skies to ensure that deflation doesn't happen. If you remember Ben Bernanke back in 2002, his famous speech, deflation, making sure it doesn't happen, they said they will do anything to avoid deflation, and they used the example of devaluing the dollar by 40%. I know for many people out there, you and I, we understand the way that this system works. They pump all this money in, and we get nothing out of it. Look at this, not a good buy. I show you this very often. It's from Real Investment Advice. And this right here, $4.70 of debt to $1 of GDP growth. The more that they expand this monetary system, whether they're doing this through the fiscal side, the monetary side being the government itself through the stimulus packages, and then we'll get into the helicopter money at some point, it's just going to rain from the skies, or we're talking about quantitative easing and what they do. Either way, they're inflating and they are essentially devaluing the currency. Okay, that's the long and short of it. A lot of people like they pick, oh, you said this or you said that. What does it matter to you? To you. We can get into all the little intricacies and all this thing it doesn't matter. It doesn't really matter. What matters is what it means to you as a person, as a consumer, as an individual. That's what we should be thinking of. But everybody gets lost in translation. They get lost in all of this. And instead, we should be dealing with what we have at hand. If we're dealing with inflation right now, okay, that's fine. What do I got to do? What do I got to do? I take those steps. Instead of saying, well, you know what? I'm not going to care about that because, the Federal Reserve's never going to let it happen. The government's never going to let it happen. I mean, that's a defeatist attitude, really. And, I've been accused of being pessimistic and so on. But to me, that's just nonsense. To simply rely on a group of people that are absolutely known to, you read about their history. I can't forget it. Analysts expect that the S&P 500 profits rose 64% in the second quarter from a year earlier. That growth rate will be the highest in more than a decade. Oh, if you stop there, you wouldn't know that, of course, that's measured against, basically nothing. So essentially everything looks higher than that. The numbers are going to look wacky, and there's going to be an extremely hard comparison at this point. But don't worry, growth is there, profits are there, and so on. Look, the earnings are coming around, and you're going to see there's so much positivity. There's going to be so much positivity, especially when you look year over year for a lot of companies. Mega cap tech stocks have outperformed the S&P 500 since the start of June. And you can see that green line right there. That's the S&P 500, which has done well. But you compare it to the FANG stocks, and it's not even close. Take a look at some of these. Apple, over 15%. This is unbelievable. Amazon, same situation. These companies are literally worth trillions of dollars today. More and more money being pumped into them. What I would say the downfall of these particular companies, or the potential downfall, I should say, is major regulations. Because there can actually be major regulations where we know that the government and these companies are obviously together. They work as one entity anyway. But if somehow there was kind of a nationalization of these companies, even to a minute extent, I think that could put a lot of price pressure downward, at least in the short term. The changing outlook that we're talking about here in this article out of Bloomberg, essentially what's happening in China, is that the PBOC, the People's Bank of China, cut the amount of cash most banks must hold in reserve in order to boost lending. So we had the China credit impulse, which started to fall. And they did this intentionally because they were trying to prevent it from overheating. And now they're going the opposite direction. While the PBOC said the move isn't a renewed stimulus push, the breadth of the 50 basis point cut to most banks' reserve ratio requirement came as a surprise. So I'm going to follow it. I'll keep you up to date. Another thing, and why I wanted to mention this in relation to the tech stocks, was that you have this. In China, they're cracking down on a lot of these tech companies. China IPO crackdown freezes the plans for TikTok's parent company. Okay, that's ByteDance. And they're worth a lot of money, billions and billions based on these, estimations of them. You look at Didi, DIDI, which was another one. It went with this US listing. They shut it down. I mean, it's a mess right now. So you've got to watch out. I understand that's China's involvement and so on. But with any of these super big companies, you're always going to have these times in which there's this huge volatility, and a lot of people are going to be wiped out, particularly because so many times they use margin, and it's really dangerous. Leverage, you've got to watch out with leverage. A lot of people make a big mistake, okay? I wanted to thank everybody that commented about the insiders yesterday, because I had, or today as I record this, but yesterday to you by the time you're watching this, because I mentioned the insiders and how, some people don't like me talking about it and so on, but I'm just going to continue to do it anyway. But so many people actually were thanking me for having the insiders, because that way they don't even have to go to the platform anymore. They can actually just go to my website, which is awesome, because you can avoid all the nonsense, the spam comments that are in there that are really bad and trying to pull people into these scams and things. Really terrible what's happening. But this is the good thing about it, and I take that as, of course, a plus, and I thank you. If you don't know what the insiders is, basically it's just my video of the day where you get that directly to your email, and that way we can avoid the censorship and all that. Okay, not supposed to talk about that. Anyway, sign up for free, themoneygps.com. If you found this video informative, hit that thumbs up button. By clicking that one button, you do support me. Thank you very much. And if you haven't seen this video yet, you've got to check it out. Click it and I'll see you there.